Equities, fixed income, currencies, commodities, and of course derivatives, which is kicking off this week. This is Markets Today. Good afternoon, welcome. I'm your host, George Bodo, co-hosting this show with Mbide Mwema. We have some nice and enticing discussions, very enriching discussions about the markets we have lined up. We're having another nuanced discussion around banking sector consolidation. And you can look forward to stuff like, is balance sheet a value proposition in this market or not? But before that, we'll give you a round of the market. We also have market close coming up in just about 20 minutes. Market close. We should look up forward to some closing statistics for the day. But so far, with just about close to 20 minutes to go, we have about turnover in the region of 350 million Kenyan shillings, which is slightly higher than yesterday's close. We have huge participation, especially coming from surprise inclusion in the top 5 in terms of participation, which includes Kenyan. We will also be looking at discussing a bit what's the surprise inclusion of Kenyan, what that means. Mbide, Kenyan is one of the top movers. Surprise inclusion, while we haven't seen Kenyan breaking in that. Almost 6.5 million shares traded. So would you have an attribution to these?
It's very interesting because recall earlier in the morning in our show, we actually talked about the upcoming launch of derivatives.
Yeah.
It's a single stock derivative in the futures that's going to be launched on Thursday.
Yeah.
The 7 stocks that are going to be part of the single stock options, Kenyan is one of them. I wonder if there's any correlation, because the element of this new investment class is to spur volumes, and we did take note that Kenyan and Bamburi were 2 odd names that you would not expect on the single stock options. So I think maybe this is creating some visibility, but better to wait for the market to end, touch base with the traders on the ground, see what's happening.
Another surprise inclusion, you talk about derivatives inclusion, the single stock futures, we have BAT also included.
Exactly.
BAT.
There's BAT there.
And some of the most liquid, Bamburi
and Kenyan were
interesting. Getting a block of 100,000 shares could sometimes can be a tough task for traders. Yeah, you think this could be positive for liquidity and trading volumes?
It's positive for liquidity if it actually catches on in the market. It's certainly a positive thing, but certainly worth looking out to see who was trading, and we would have more insights on our show tomorrow. Yeah,
you can certainly look forward to such a discussion. In terms of the gainers, we are seeing, it's a continuation of the fringe stocks. I call them fringe. The right word is actually small cap stocks. We have Everready up 10%. Would you buy Everready?
No.
When is the last time you bought an Everready battery?
Exactly.
Yeah.
Yes.
Okay.
But I buy Energizer. Do you think they should list?
Maybe they should. The second last is TPS Serena. TPSC is East African, which is up just about 8%. And also another surprise inclusion there is KPLC. It's up 2.8%. Is this something to do with the investigation? Nothing.
I haven't seen anything.
Yeah.
Your guess is as good as mine.
Okay. On the losing side, we have, again, today we have small cap stocks. You have Chumi, Nabo Business Venture, Home Africa, Longhorn, and the Scan Group. Well, but the market indices actually very green, just to mention that. The NSE 20 index is up 74 basis points, and the All-Share index is up 27 basis points. Broadly a green market overall.
Interesting, because again, recall that the nation is actually mourning the demise of one of the titans. Safaricom CEO, Mr. Bob Collymore. He still rest in peace. He has been laid to rest today. And we have seen the market remain muted on that news. And by the time we were coming on air, 7 million shares had traded. And I think that the market is taking positively to the new interim CEO, Mr. Michael Joseph. It's indifferent. It's indifferent.
The appointment of Michael Joseph as interim CEO.
Yes.
Yeah, I saw a bit of an online fury on Twitter about that, but
Twitter doesn't trade on the NSE.
Twitter doesn't trade. Twitter doesn't vote. Twitter doesn't do so many things.
Twitter is loud.
But the forex market.
Oh yes, very interesting one there.
Yeah, we're just seeing Kenyan shilling just inching closer to 103 against the USD.
Exactly.
Are you worried?
Possibly, but in the interim, it seems there's end month demand from importers, oil, machinery, your usuals. It seems very technical, and expect a correction next week. But if it continues maybe for another 2 or 3 weeks, then there's some point of concern. I think now it's more technical.
Just to make it point that we have had some significant outflows, foreign portfolio outflows out of the market, especially in the month of June. Actually, month of June market was, the foreign portfolios were net sellers, and we showed that from the SIB quarterly report last week. The government also redeemed the bond last week. So we are talking about inflows just close to about $800 million. Surely that has to have an impact on the exchange rate. But not to worry, it's all transitory. It's transitory. Let's look at the long-term chart and see how, let's see where the market closed, analyze the long-term chart. Overall, I mean, FX markets will always have this small interim volatility downward, up and down. But I think overall the long-term trend could always be stable. So, I mean, the key word here for you is don't worry about that transitory weakness in the FX. Even the central bank governor says, don't worry, be happy. We'll take a break. Let's look at the commodity prices. When we come back, we are discussing banking consolidation. And with us, we have Charles Miano from Nabo Capital. We are having another nuanced discussion about banking sector consolidation. And you should look forward to, we are going to answer one question that we want to answer after this show is balance sheet a value proposition in this market? Don't go away. Welcome back. We are discussing banking sector consolidation in a more nuanced way, and we have these as Charles Miano from Nabo Capital. But before we get back to banking sector discussion, let's look at market close figures. Turnover slightly up compared to yesterday. We had just done about 376 million shillings. Some of the top movers today, obviously, top mover 10% up is Everready. So in terms of price gain, top mover in terms of volumes is obviously Safaricom, with a surprise inclusion in the top 5, Kengen. There's only one bank in the top mover space, which is Cooperative Bank. But talking about banks, Charles, which bank should we be buying?
I think.
And what's the story?
I think the idea is depends with your investment thesis and your outlook and where you're seeing the banks. I think one of the key considerations that investors are having is the interest rate cap.
Yeah.
What will happen? We know Minister of Finance.
Nothing's going to happen.
I think something will happen,
Yeah.
but I don't know to what extent, whether it will be a complete removal or an adjustment of the caps.
Yeah.
But I think that's really a key thing that investors are looking at. And that's why we're seeing some very muted movement in banks, especially when you're looking at the pricing. Especially from Q2, most of the banks had their highs between March and April. And then you've seen sort of like a downturn in many of those stocks. So the question is now, where do they move from here? And they need to, I think the need to enhance credit and build your loan book is very key, because that's how you'll be able to pick up your NIMs or your net interest margins and improve your profitability overall. Yeah. So right now, I think there are a few things or a few factors that investors need to look at. Another thing is pricing, but I think on the pricing front, if you're looking just in Kenya alone, I think the pricing is fair.
Okay.
I think the pricing is fair. So what you have to consider is the outlook, especially on the interest rate cap.
Yeah.
Okay. Maybe I want to ask, Cooperative Bank has traded 1.6 million shares today, and we've been hearing it coming about. Do you think somebody should buy Coop Bank?
I think it's a large enough bank,
yes.
And the question is, what advantage do you have acquiring Coop Bank? I think largely, I don't think it makes sense right now.
Okay.
You'd rather acquire a niche bank,
such
especially niche banks. I'd say niche banks that fall within the tier 2 or tier 3 space, that serve a specific market, and you're better off doing that, and it's less pricier, right? And I think largely when banks are coming in, they're asking themselves, how can they take advantage the current market, while at the same time be able to compete with the big players.
Yeah.
What?
Yeah.
Oh.
So just go ahead. Yes.
Yeah. So what we need, I think, is some form of consolidation within this, within the sector, especially within the sector, because we are overbanked, as I mentioned earlier, and just bring some comparison. For example, our minimum capital is about 1 billion shillings.
Yeah.
If you compare that to Ghana, right now is at 7.6 billion shillings. Previously, they were 2.2 billion. And then they increased last year from 2.2 billion to about 7.6 billion. Yeah. And that led to banks reducing from all the way from 36 banks to about 23 banks.
Yeah, that's
so
that's a big move. I mean, I follow the story.
Yeah.
Yeah, but beyond that, maybe we have a profitable man there, is that our viewers should buy niche banks. It's all about the niche banks. That's according to Nabo Capital. Buy niche banks.
But I hope our viewers have anything close to 1 billion shillings to buy. Because if you just buy 1% of the stock, it doesn't make any sense. Because effectively, when you look at the price to book valuation, and you may probably add on to this, you're saying you're looking at the balance sheet. But when you look at tier 2, lower tier 2, tier 3 banks, the quality of that balance sheet. So in as much as you're paying 1 times book, you have to be prepared to put double, if not triple the amount of the purchase price just to clean up the book. Is that if you had that kind of money today? So for instance, say you had $100 million, would you actually go and pick a tier 3 bank, or would you actually go and look to partner with somebody in the digital lending space?
I think, well, the first consideration would be sort of like the expertise level that I have within my operation.
Okay.
Because the idea is if I can get a cheap bank, but be able to clean it up.
Okay.
Because some of these banks are not doing quite well. We're seeing NPLs upwards of 50%. And we're seeing costs, if you look at cost to income ratio, above 60%. So it's going to take a while. So the idea is what market do you want to target, right? But if you want to build scale to, I think digital space would be much more efficient.
Okay.
And if you're able to partner with the right talent, especially within those firms, then I think you can gain that advantage. And maybe it's less of a hassle, because consolidation in itself is not
it's not an end by itself.
Yeah, and it's not a one-day process as well. It takes a very long time, and it's a huge process.
We've seen some very painful consolidation process taking so long time.
That's why I'm coming to the point.
Liabilities keep
saying
skeletons keeping
Gentlemen, I keep saying there's the theory, and at times we get caught up as investment analysts on the theory, because what we're saying is yes, consolidation should be happening. We're seeing a bit of it happening, but we're saying we need to move from where we are at 44, is it 44 or 42 banks now, because there are 2 ongoing mergers, right? We need to move from that number to a much smaller number. But then we're saying some of these banks have assets that don't make sense. So then the question is, how does it happen? You've given us one solution. You've said CBK could potentially look to go the Ghanaian way, just increase the capital. But we always, if they're going to increase the capital, Parliament has to be involved in that conversation. And there's always a huge disconnect. There's what the CBK is saying, then Parliament comes and says, because you cannot ignore the fact that some of this tier 3, they're affiliated with certain ethnical groups. So those groups are represented in Parliament, and they forestall the process. But I like that you're saying the first thing that we need to consider is review the capitalization rates. What other 2 or 3 other things would we want to see? Because then when we see them, then we begin to see that we are heading into that element of enhancing consolidation and creating much stronger banks in Kenya.
Yeah, I think, so before I answer, I think you actually speaking to what I was going to ask is some of the regulatory gaps that you see in Kenya today. I mean, you've just cited the low level minimum capital regime. So, I mean, as the answer, let's just bring out for our viewers some of the gaps that you've seen in the market.
I think that's a good point in regard to are there regulatory gaps that can be filled. I think the key one is the interest rate cap, right?
Okay.
That's the main one, because it doesn't allow bank to price. I think in addition to that, at least the banks are working on implementing the Basel II and Basel III, which will at least buffer, lead to stronger capital. And that's one of the key reasons why we're seeing some of the consolidation in regard to having a strong buffer, which can allow you to, at least when you start lending, you have a strong balance sheet to support that, right? In that regard, I think once you solve what we've seen in other markets, once especially in the capitalization, if that's solved, then we'll see at least some form of strength coming or resilience coming to the sector, because you want a resilient sector.
Okay.
At least in 2015, we saw the CBK come full force in regard to management, can I call it cleanup, where we saw CBK making sure that banks had the right people at the helm of some of these banks and making sure corporate governance was quite key. We're seeing, for example, in other markets where there's limits in regard to CEO. So a CEO, for example, can run more than two to three terms. And so to that extent, it makes sure that corporate governance is key. So we haven't seen that in Kenya. But that I think is a step, but not a step that maybe now, but I think maybe in the future. But I think the key one's capitalization as well as the interest rate cap. Once we see some change in that, then we will see a more stronger sector.
How big of a problem is corporate governance, weak corporate governance practices in the banking sector today?
I think the banking sector, at least on the corporate governance perspective, I think it's improved. We are seeing that they do follow the procedures in regard to having a full set of independent and board, and also CEO and chairman separation is quite key. And that's we're seeing most banks comply to that, especially speaking to the listed banks. Now, when you look maybe to maybe tier 3, maybe that's a question of seeing who are running it and whether that level of disclosure is there. Because some of these banks, especially the tier 3, they've been formed from one individual, right?
That's true.
And this one individual has a significant chunk. But again, we know that banks don't allow one individual to own more than 20%. So again, there is controls there, and this, the regulations have tried at least to cap that, which is great. So I think corporate governance, to an extent, is relatively strong.
Talk to me about regionalization and consolidation. How does that work? Is there any correlation between the two?
I think now banks are asking themselves, okay, have we exhausted our growth within a particular country where we started out? We've seen significant expansion, especially within the Eastern African space for some of our tier 1 banks. When we saw the South Sudan when they gained when it became a full state, we did see many banks migrate there, but they have not done quite well because of the tensions within South Sudan and also the depreciation of the currency. But we are seeing banks venture out even beyond. We're seeing Equity Bank venture into Rwanda. We've seen them venture into Congo.
What about Ethiopia? What's the opportunity there?
I think the opportunity is vast there.
Okay.
But now the question is whether the market is willing to open up and when it will open up. Some of the banks are mentioning that once it open up, they're really they're ready to move. So I think.
Do they have sufficient capital, or is the consolidation drive then driven by the fact that they want to have strong balance sheets to be able to pursue opportunities in other African countries?
That could be a possibility, and that actually helps once you consolidate. But I think some banks, they'll have to buffer build up more buffers in their capital. But I think for some of the tier 1s, they have sufficient capital to take advantage once Ethiopia opens up.
Okay, good. Let's talk markets, and let's change a bit of gear. Talk something else. Derivatives. Coming in the market this week. Full trading next week. Your views? It's good positive for the market?
I think it's positive for the market. It's introduction of a new asset class in which investors can trade in. It opens up our markets significantly. We're the third market to actually integrate this behind South Africa and Egypt. And I think they take, I think it's a positive direction. It's been long in coming. We've been waiting for it for quite a while. And they've done where there's the single stock futures as well as the index then tied to the NSE 25. Be interesting to see how it develops, especially within the quarter. I think largely it will take some time to see domestic players come strongly because of again there has to be a change in regard to some regulations because you have, for example, the RBA the IRA, regulated that only 5% can be allocated towards derivatives. So that means you have some restrictions to how much you can actually participate.
Is this 5% already approved, or is it work in progress?
I believe it's approved.
Okay.
Yes. And also the idea is to demystify what derivatives are to the larger market. Because most of them think derivatives, they think risk, they think the financial crisis of 2008. CDOs and all these things.
Lehman Brothers.
Yes.
And you're bringing all this chaos into Africa. Are you going to buy the derivatives when they launch on Thursday?
It's something we're looking at. I don't have the full answer right now, but it's definitely something.
It's an interesting asset class for you. But Tom, we've had a problem with the uptake of new products in the market. We've got Barclays ETF.
Nobody has
Gold ETF. We have with an I-REIT.
We had the D-rate that didn't do very well.
D-rate that didn't do well.
Even commercial paper with some of the companies.
There's just a sense of a risk aversion in this market to new things. Are we too used to government bonds and equities?
I think the market changed, and I think it changed back in 2015 when we saw the collapse of Chase Bank and Imperial Bank, because they had issued quite a significant amount of debt, which was actually oversubscribed. So a lot of the people who deal with this got burnt, and now there's that averse nature to investors. I think it'll take time, but eventually it will pick up. The expectation, I think, even for the markets is not for the derivatives to be the #1 asset class within Kenya in like 1 year. But the idea is once you slowly integrate these products, eventually they will apply to the different investors and they will have a huge uptake. So I think progressively we will see more traction. And whether that happens within this year or next year, not so, but I think within the long term, maybe 5 to 10 years, we will see some significant movement.
Is there any importance on paying any attention to the constituents of the single stock futures that will be offered? So the 7 stocks, Safaricom, Equity, KCB, EABL, the surprising ones being Kengen and Bamburi and BAT. Is there anything? Does volume increase? Does interest increase in these stocks once we launch this new product?
I think there will be some interest, especially looking at the futures, because futures to some extent dictate sort of like movement within the underlying asset.
Yes,
again, the futures are not assets, so what you're acquiring is the underlying over a period of time. So you're saying I'm going to acquire, let's say, the Safaricom futures within 3 months. Again, you don't acquire the asset, but you're going to settle it in cash. But the idea is I think it's going to increase some traction, and within the derivatives market, you can take the opposite side, meaning that you can, if you view negatively a position, you can actually take now the selling side, as opposed to where we are right now, where you can just sell a stock at this moment and not have any view or take advantage of any view that you may have in the future. So I think it will increase some traction, but we'll wait and see how it goes.
Just to ask you, which is the best complementary asset product to introduce on top of it? Is it between swaps and between options and short selling? Which is the best complementary product to introduce on top of derivatives?
I think short selling.
Short selling.
Yeah, I think short selling.
It's a no-brainer.
But it's not in the timeline because we're only seeing short selling. But we're only seeing NSE saying, okay, let's do the single stock. Let's wait and see. Yeah. And then they're like, okay, fine, let's do the index futures. What do they bring short selling? Are you demanding that they should open that opportunity?
If I'm so bullish on a stock, I should be allowed to short sell.
Exactly. Exactly.
Exit that.
Short sell, just blow up your employer's balance sheet and go home,
and leverage,
or potentially make money.
Leverage short selling, right?
Yeah.
Leverage short selling.
We've seen actually some funds, especially within Europe and US, have a dedicated department that just short sells opportunities. So you're looking at the sort of like the negative side of a company and saying, I'm viewing this company and I see the outlook is negative, and these are my reasons, and I think we should short sell, basically borrowing, buying and then selling. So I think the issue now comes in where it's based on leverage, where you're borrowing. So I think that has to be
tightly regulated.
Exactly.
Tighten the margin requirements around short selling.
But beyond the regulation, you bring out a very interesting element. You do need a balance sheet for this. So as we're seeing the NSE getting us to new products, derivatives, and potentially short selling at the right time, then are the banks showing interest in this asset class? Should we see them aggressively getting into the stock brokerage business?
Yeah, so what banks are coming in, they're coming as clearing members. So what we're having is, we're having sort of like a chart, if you might say. So you're having your customers or your clients, then on top of them, you have your stock brokers. So your stock brokers become what they will be called a trading member. Then on top of that, the trading member, then you have the banks. So NSE right now is working with 2 banks. So the idea is to increase that scope.
Which banks are this?
They're working with Cooperative Bank and Stanbic Bank.
Okay.
So, and then after the banks, then you have now the clearing house, which is NSE Clear, which they've formed to clear, I'll settle those transactions. So banks are coming in, but now they're coming in more of like a support role within that, within the structure. So I think banks will play that. I don't think they will play the stock brokerage.
Market making more market makers. Okay. And on top of so we're starting with single stock futures. There was also the index futures.
That's the next
product. Which is the next big asset class that's new to is it commodities or the FX?
I think commodities. I think commodities have. There is demand around the
commodities,
and especially I think there's more eyes looking at commodities, be it oil, be it gold, be it even
corn, soybean.
Something that actually can apply locally. Right.
What about the Barclays? Gold ETF.
The gold ETF. I think that's going. It's going to take time. It's going to take time for people to adopt it. But there are benefits to that, given the fact that you get exposure to gold. And we've seen over the last 2-3 weeks, gold rallied quite a bit.
Exactly.
Off the back of the sort of the dollar weakening, and then now people finding safety within the gold.
Charles, gold, traditionally the global markets, gold is a hedge. You hedge your portfolio against volatility in the market, and usually when we see there's some increased the VIX starts to become more volatile, then portfolio managers go into gold. These are local portfolio managers don't understand that concept, or I mean, I expect local fund managers to
George, the question should be, he's a fund manager. Why does it, he
and
knows
he has a discretionary fund.
He has a discretionary fund.
So
either you're buying Barclays,
why are you not buying a Barclays?
Why would you not buy Barclays ETF? Because I mean, we're just asking, the question is, we have new assets that are coming to the market, and there's no appetite for it. Is there a reason? Or are we introducing the wrong things and there's absolutely no demand?
I think the products that are being introduced are whether they're relevant. Maybe the question is just timing. I think maybe the ETF was launched at a time when the markets were a bit jittery. And perhaps I think it'll take time. Definitely take time. It'll take time. And also, if you think about it from a wider perspective within Kenya, the fund managers they have limitations in regard to how much they can allocate to can I call this niche sort of assets?
Complex instruments.
And yeah, to the limit, how much can you actually allocate as part of your portfolio? So I think regulation as a whole has to be more accommodative towards new asset classes. They work now, CMA working very well in conjunction with the NSE. And I think, and then that adaptation and also educating the masses, educating the trustees, educating the asset managers, educating the brokers.
Is it 50 years?
Yeah.
Because the NSE was established. Or
okay, we've got to end it there. It's been nice having you, Charles. Very exciting discussion.
Thank you.
It's been markets today afternoon. We've discussed a number of things. And finally, we have the question with the answer. Balance sheet is a valid proposition, but it's not the main one. We've also realized that actually regulations can contribute to retirement poverty. A lot of things we've discussed. Buy banks, according to Nabo. Buy gold ETF. Derivatives coming on Thursday. Look forward to that. It's been a nice afternoon talking to Nabo Charles from Nabo Capital, and we'll leave you now. We'll leave you with the market close figures, and we'll see you tomorrow morning.